So, hello, dear Paolo. Thank you for being here with me, and thank you for agreeing to record one new video in our series of podcasts in the FinTech Horizon 2020 project. I would start with the first topic, with the first question, so that we dive more into the network models that you have used in your paper. But first, I would start with the artificial intelligence, which, as we've all noticed, enters more and more into the financial sector. And one of its main applications is the robo-advisory. So first, I would like to kindly ask you about your perspective on the robo-advisory in general. And please try to focus on the advantages derived from the adoption of this technology.
Yes. First of all, thank you for having me here. Yes, I would start saying that the wealth management industry is in the middle of a critical transition. So there is a strong regulatory, technological, and economic force which is pushing industry players to revisit their business models and also their value proposition in some cases. So there is, of course, an impact on the regulatory side in the sense that MiFID II, for example, posed several new challenges to the financial institution. However, this can also be seen as an opportunity that forced the industry players to reinvent their economic and value proposition. So that this, combined with technological disruption, the advent of AI in particular, and the demographic trend and wealth distributions, think about millennials and digitally native nations, provides investors with low-cost wealth management solutions, which are defined by algorithms based on asset allocation based on algorithms, basically. So the advantages of such a tool is that it provides low-cost alternatives to traditional advisors by eliminating human labor. And you can think about the fees to the consumer, which are reduced from 0.2 to 0.5% in general, which is far way less than when you take a human to do the work. And there is broader financial inclusion. So many $100,000. So this is a bit of the thing that it gives broader financial inclusion and enhances speed and efficiency. So this robo-advisory, of course, you don't have to call or meet physically the financial advisor, but it works automatically. The limits are, however, that it might increase the risk in some ways of an individual investor. You cannot choose into which mutual funds or ETFs or so on invest, and so is the algorithm doing that. This might be subject to contagion risk among the assets and might not correctly match the investor's risk profile. So this is a bit of an open issue in the context of robo-advisory.
Okay, thank you, Paolo, very much for describing this both advantages and limitations. And I would go now to the cryptocurrency or crypto asset, which is one of the hottest topics of the day. So what would you think the opportunities and both the threats connected with this realm of cryptocurrency, crypto assets, are in the context of robo-advisory? So mixing these two worlds, robo-advisory and crypto, what do you think are the pluses and the minuses?
Yes, of course. Well, let me say that cryptocurrencies are a possible and somehow natural also choice of asset class which has some appeals to be considered for robo-advisory investments. And indeed they are, because there are already a number of firms which are operating with robo-advisory services within the cryptocurrency market. So think about, for example, Wealth Square or Empirica. Basically, they provide automated portfolio allocation services that employ cryptocurrencies. So I believe personally that the high frequency trading component might work very well, depending, of course, on the algorithm employed. So you can achieve very good results because of the volatility, which in turn is, of course, also something that might be seen as a big disadvantage or shortcoming, in the sense that, of course, you get only a fraction of investors, risk lovers, which could handle and accept such a high portfolio variability, but there are many others which would not bear the risk of such innovative financial instruments. And then it's therefore fundamental to take into account for the interactions between these market entities in order to detect co-movements, early warning of critical transitions of the financial markets, and exploit them to make profits or to hedge risks. So I think this is one of the biggest challenges that the robo-advisory industry, which wants to include cryptocurrencies into their products, must take into account.
Okay, thank you, Paolo. I would relate to the paper you've co-authored, and based on it, you've also developed one of the use cases in the FinTech Horizon 2020 project. The paper is called Network Models to Enhance Automated Cryptocurrency Portfolio Management. And I would kindly ask you to give us more details about the main idea, the main findings, and also the practical implications of your findings. And also, I would kindly ask you to go one step further and give us some directions on how to use these findings that you have in order to create innovation. So the practitioners to actually include this in new products, new services for the customers.
Yes, sure. Well, as you said, we basically co-authored one of the use cases of the FinTech Horizon 2020 project, in which we build network models to give a boost to the automated cryptocurrency portfolio management. What we do, basically, we start from the premises that many algorithms used in the industries are based on minimum variance portfolio optimization, or a few modifications of it. So we build on this literature, basically. So we provide a model which is which takes root from what practitioners actually do, and modify it in order to take into account for the systemic risk which is embedded in a financial system. In our case, the financial system is the cryptocurrency space. So as you might imagine, this let's say this financial system has a lot of critical points in which it turns from upward to downward trends, and it's very, very much volatile. So that this calls for the implementation of a tailored methodology in order to take into account for such a high regime of volatility, which is not observable in other asset classes. So that we build basically a network-based portfolio allocation in which we take explicitly into account for the systemic risk which is given by the cryptocurrency system, so that this tells you how much interconnected are the cryptocurrencies among themselves, and can take this feature into account in order to build an optimal portfolio allocation. We showed that the results are quite satisfactory, in the sense that we tested it even on a period of down market. So in this case, we are able to hedge risks much more than the minimum variance portfolio optimization, which is used generally as a benchmark. So this is very important because we have developed an algorithm that can be used by practitioners in order to hedge the risks arising from cryptocurrency investments. I believe that this is part of the second question that you gave me. The future research and development in these fields, also for practitioners, is to build and to explore hybrid portfolios. Because nowadays robo-advisors are taking into account mostly ETFs or mutual funds. I believe that hybrid portfolios composed both of such instruments and on the other side cryptocurrencies may offset in some ways the risks arising from the financial industry dynamics, because you balance, of course, the risk, the idiosyncratic risk of the market itself, of the type of market itself, and you can, of course, also enhance profitability because of the rise of the cryptocurrencies trend, which is, for example, nowadays really accentuated, so it's really marked. Then I think that another possible extension is to deal with time varying investor preference parameters in order to tune them over time, depending also on the evolution of the market, so that the expectations maybe should be in some ways calibrated to the period that the market is going through at that time, at that point in time. So I believe this is it.
So thank you very much, Paolo, for these details, and I'm quite sure this will help our viewers to decide to go through the paper and to the use case, and maybe connect with you for further details. And thank you also for giving us this details about where you see the practical implications of your findings. And I would, before ending, I would like you to just let us have a few words on what's the future. So what will you focus for future research, and where do you think this field of robo-advisory using crypto assets, cryptocurrencies or not, will go into the next, let's say, 1 or 2 years? So which are the main trends, directions that you spot for the future?
Yes. Well, in the future, for sure, I will focus also on the development of an algorithm that takes into account also for the sentiment which is embedded in cryptocurrencies, because it's really important to take into account for how much in social media it's talked about cryptocurrencies, what is said about cryptocurrencies, which is the overall mood of investors. So I believe this is something which also the industry should look for, because there are different sources of data which can be employed in order to answer the question whether the cryptocurrency price is driven by the sentiment or even whether there is a feedback effect. So this, I believe, is very important for an asset class such as cryptocurrencies, which of course do not have fundamental values. So the valuation tools, the classical valuation tools you use for enterprises do not apply here. And therefore, it is argued that much of their movements is given by sentiments. So that I believe this is the one of the future direction which who wants to employ such tools should pay much attention to, and which are the channels of this information. So there are maybe some more reliable channel of information. There are some that are more used by newbies. So I believe it should be explored, this fact, in order to give a comprehensive overview of what's going on down there in the market.
Okay, so thank you very much, Paolo, for today, for having this interview with me. And I definitely think we should do one more in the future. Thank you again, and I wish you a great day ahead.
Thank you very much.